The House Insurance Committee will come to order. Mr. Clerk, will you please take attendance?
Chair Harris.
Here.
Representatives Tisdale, Leitner.
Here.
Posthumous.
Here.
Aragona.
Here.
Nyer.
Here.
Schutte.
Here.
Carter.
Here.
Tate. Fitzgerald.
Here.
Witset. Mr. Chair, you have 8 members present, a quorum.
Thanks, Mr. Clerk. And can I have a motion to approve the minutes of the December 17th meeting? Representative Schutte makes that motion. Seeing no objection, the minutes are approved. All right. Good afternoon it is now. Today, the Insurance Committee is going to hear testimony from the Department of Insurance and Financial Services regarding the Milliman report commissioned under legislative direction to evaluate the impact of Michigan's 2019 no-fault reforms. So let me start with the basic point that I think every Michigan driver understands. Auto insurance premiums are affected by many forces, all at the same time. Vehicle prices are higher, repair costs are more, cars have more technology, sensors, and electronics than ever before. Labor and medical costs have risen. We've also seen national trends in claim severity and inflation that affects every state, not just Michigan. So the purpose of this report was not to pretend that those pressures don't exist. The purpose was to conduct an analysis on the following: cost, participants, demographics of those impacted, access to care, access to providers, and total impact on insured accident victims and access to long-term care providers. So, did the 2019 reforms help reduce costs for Michigan drivers compared to what they otherwise would have paid without the reform? And to help answer that question, we're going to invite DIFS up to the table to talk about the report. So thank you all for being here, and I'll let you come on up, and you guys can start whenever you're ready.
Good afternoon, right? Okay. I'm Jenny Geese, Legislative Liaison Manager, and I have Joseph Sullivan, Director of Innovation Research at the Michigan Department of Insurance and Financial Services. Just real briefly, DIFS ensures the safety and soundness of the state's insurance and financial service industries. As a reminder, we are fee-funded and do not require tax dollars to operate. We appreciate the opportunity to present today on the auto insurance study, and I'd like to give a little background on how it kind of came to be. So, in the fiscal year 2025 budget, the legislature approved Section 401, which directed DIFS to commission a study and report on the effects of the 2019 bipartisan auto insurance reform. Per this requirement, the legislature, the study was completed and contracted a third party, Milliman Incorporated, and we are before you in our role as a resource for the legislature to provide an overview. Specifically, DIFS was required to consider the impact of the reforms, just as the chair outlined, and we initiated a request for proposal and a competitive bidding process to engage a firm to conduct the study and author the report. The RFP that we put out received one bid, and that was Milliman, and they were awarded the contract. DIFS directed Milliman to disclose and implement a plan for avoiding any potential conflict of interest. As part of this plan, the project was led by a senior consultant who does not currently provide services to Milliman's Michigan-based auto or health insurance clients. Also, there was no discussion about the results with any other Milliman clients. The report was distributed to the legislature on December 1st, 2025, and a link to the report is available on DIF's website. As many of us know, in Michigan, there are 3 basic coverages in auto insurance policy that must be purchased on every vehicle. There is personal injury protection, PIP, which you're going to hear a lot about today, which covers your medical care in the event of an accident. We have property protection, PPI, which covers damages you cause to others' property, such as buildings, fences, and other people's properly parked vehicle. We have residual bodily injury and property damage liability, which covers claims made against you for injuries to others if you are at fault in an auto accident. Then there are optional coverages that include mini tort, excess attendant care, collision, comprehensive, uninsured, underinsured motorist, bodily injury. Also, I should note that an auto lender may require some of these optional coverages as a condition of the loan. So before we get to the report, here's a brief overview of changes included in the 2019 reform. Public Act 2122 became effective June 11th, 2019, amending Michigan's auto insurance no-fault law. Prior to the reform, Michigan's law was unique from any other state as it required all Michigan drivers to purchase unlimited PIP coverage, which covers your medical care in the event of an accident. The reform was primarily aimed at addressing PIP and introduced options to allow drivers to purchase lower PIP coverage levels or to opt out entirely from PIP medical coverage while still maintaining Michigan's unique unlimited PIP option. No other state in the country has this level of coverage available. The reform also required insurers to lower statewide average PIP rates, and PIP generally accounts for about half of consumers' auto insurance premium. The reform also made changes to bodily injury liability coverage. Insurers must now offer bodily injury coverage with the statutory default limits of at least $250,000 per person, $500,000 per accident. Consumers have the option to purchase limits as low as $50,000, $100,000 by completing a form that acknowledges the understanding of their choice. For context, prior limits of $20,000, $40,000 hadn't been updated in years. The reform required each insurance company to reduce statewide average PIP medical premiums for 8 years. It's also important to note that this mandatory rate reduction included in the legislation only applies to the PIP proportion of a policy. So PIP typically represents almost half of an individual's driver's premium. And again, Michigan is the only state where unlimited PIP medical continues to be an option. Here are some additional ways the reform addressed costs. So we have one, the fee schedule. The law set a schedule of fees that can be charged by medical providers for PIP medical. The provision took effect after July 1st, 2021. Second, we have the Michigan Catastrophic Claims Association assessment. Since 2019, the MCCA assessment decreased by $120 per insured vehicle. And as you know, the MCCA is an association of auto insurers required by statute that reimburses member companies for PIP medical costs currently exceeding $675,000. Additionally, we have the utilization review. So medical care provided to an auto accident victim must meet requirements for medical appropriateness. So auto insurers were required to establish utilization review programs to make these determinations, which can be appealed by healthcare providers to the DIFS utilization review section. This program resolves disputes between healthcare providers and insurers regarding the cost, duration, and reasonableness of care provided to an injured person. It also increased fines and penalties. There was also an amnesty period for consumers to purchase auto insurance without penalty if they previously did not have insurance by January 1, 2022. I think I forgot that one, So with these reform changes fresh in your mind, wanted to touch on some of the data sources Milliman relied on to complete its report. So DIFS issued a statewide data call to all auto insurance carriers that wrote business anytime during 2016 through 2024 in order to collect data on rates, claims, and losses. This data used represents about 92% of private passenger auto insurance market based on the 2024 market share. The Michigan Catastrophic Claims Association provided a variety of payment level data. MDHHS provided utilized historical enrollment and claims information for the state of Michigan, or the state Medicaid program. And this assisted in identifying the cost of annualization of medical and pharmacy services for individuals involved in auto accidents. Milliman utilized CMS Medicare fee-for-service data for both hospital and professional claims to help assess the cost and utilization of services for individuals involved in an auto accident. Two commercial health insurance data sets were used to develop a comparison point against other data sources used in the report. We have the Independent Statistical Service, a Fast Track Plus, that provided data used to inform inflation rates and adjustments for changes in driving behavior due to the pandemic. And then we, DIFS, provided data on complaints submitted to the department during the calendar years 2021 through 2024 related to auto insurance, access to care issues, and the department's Section 306 budget report, which includes our rate filings. The Department of State provided registered vehicle and licensed driver counts from 2016 through 2024, and other sources include the NAIC, S&P Global Market Intelligence, legislation, and court cases. And then we have the limitations of the report. I know we're getting through all the really exciting things before we get to the report. The report notes that that the implementation of the reform coincided with the height of the COVID-19 pandemic, during which driving behavior across the U.S. changed significantly. Overall miles driven in Michigan, as well as across the country, decreased. To compensate consumers for this decrease in claim frequency during the pandemic, DIFS directed auto insurers to issue premium refunds or credits on renewal premiums. As a result, the report notes that any attempt to measure the initial impact of the reform by comparing actual average auto insurance premiums from 2019 through 2022 would reflect these refunds and credits and be skewed by the effects of the pandemic. At the same time, the pandemic triggered significant economic disruptions. Although the reform included measures to control PIP costs, it did not shield Michigan from the broader inflationary economic environment. So consequently, auto insurers nationwide filed for substantial rate increases between 2022 and 2024 and to offset rising costs and to ensure compliance with applicable statutory standards. In order to more properly evaluate the impact of the reform, the report controlled for these estimated effects. These adjustments are described in even more detail in the technical appendix section of the report. I'm now going to turn it over to Joseph Sullivan.
All right, next slide. Oh, executive summary. All right, before we get into the findings of the study, it's important to provide context as there are several trends and factors driving national auto insurance premium increases. Inflation impacting things like the cost of repairs, uninsured drivers, fraud, increased litigation, and technological advances in cars, which are more expensive to repair, just to name a few. However, for the purpose of the legislature's boilerplate request, Milliman's report and the presentation focuses on the auto no-fault reform's impact on costs and its participants. So what are the findings of the report? In the executive summary, Milliman stated that from 2019 to 2024, the reform reduced the overall average auto insurance premium per vehicle, essentially the cost to consumers in Michigan, by $357, or just under 19%. Wayne County saw the largest savings with an average reduction of $539 per vehicle. The reform has lowered the state's uninsured motorist rate gap with that of the national average from 5.4% higher than the national average pre-reform down to 3.9% higher than the national average post-reform. After steadily increasing in the years preceding the reform, the total MCCA assessment per vehicle decreased $120 per vehicle since 2019, and I'm going to provide more details on each of these findings and more. So due to the reform being limited to PIP and BI, those were used as the basis of the review of the premium impact. Combined, Milliman estimated that the reform reduced overall average auto insurance premium per vehicle, as I said, $357 or 18.8%. The savings are driven largely by PIP, for which average premium per vehicle is estimated to have decreased $369 or 44.7% due to the reform. Comparably, small increases in litigation, the BI portion of the policy, partially offset the savings of PIP, largely driven by the change in the required minimum offered BI limits required in the reform. The report estimates the reform increased the average cost of BI coverage by $21 or 6.5% per vehicle. As mentioned, the reform gave consumers the option to choose lower levels of PIP coverage or in certain circumstances to opt out of PIP medical coverage entirely. Michigan remains the only state where unlimited PIP is available as an option. As part of this study, Milliman looked at the amount of PIP coverage that Michigan drivers selected following the reform. The different PIP options are color-coded here on this slide. As shown, the study found that many participants maintained unlimited PIP coverage. However, the proportion of drivers who have selected limited PIP coverage or opted out of PIP medical entirely has increased each year since the reform. In 2021, of the total insured vehicles in Michigan, 17.6% selected a PIP coverage other than the unlimited coverage. The proportion has grown by roughly 3 to 4.5% annually, with just under 29% of total insured vehicles having limited PIP medical coverage or opted out in 2024. While this trend was consistent across all the PIP limit options, the report states that the 250,000 limit experienced the largest nominal growth during this period, with 8.6% of the insured vehicles maintaining this limit in 2021 to 14.2% in 2024. As mentioned earlier, this reform required auto insurers to reduce their average PIP medical premium per vehicle by designated minimum amounts relative to PIP premium rates that were in effect as of May 1st, 2019, which is pre-reform. This graph here shows overall statewide industry average PIP medical premium rates reductions as aggregated by DIFS in blue, as compared to the minimum reductions required by the reform in green. As you can see, the statewide average rate reductions exceeded the mandatory reductions at every PIP coverage level. The reductions reflect the combined savings of coverage limits, the medical fee schedule order of priority, and the MCCA assessment. The report also included data on the average savings on PIP premiums for individual consumers based on their selected PIP limit. These amounts are stated relative to what would have been charged for unlimited coverage and are based on rates in effect as of July 2025. The amount shown here reflects savings on the entire PIP premium, including premium for non-medical benefits, and do not reflect savings on premium due to the portion of PIP covered by the MCCA, which is reflected by the reduction in MCCA assessment that we will cover on the next slide. In addition to the reduction of premiums, the report included data on this reduction of MCCA per vehicle assessment. Before the reform, the MCCA assessment peaked in 2019 at $220 per vehicle. The MCCA assessment has decreased since then due to the medical fee schedule changes in the reform. So since 2019, the MCCA assessment for anticipated new claims decreased by $142 per insured vehicle. Participants who selected a PIP coverage option other than unlimited do not have to pay the MCCA assessment for new claims, though they still are required to pay the MCCA deficit recoupment assessment. Including the MCCA deficit recoupment assessment, the total assessment has decreased by $120 per insured vehicle. Starting July 2026, the assessment will be now $84 for drivers selecting unlimited PIP and $19 for those selecting other coverage limits. The report included information about consumers' selection of bodily injury liability limits and how the average BI premium have changed over time. Prior to the reform, as Jenny mentioned, the proportion of consumers who selected the statutory minimum BI limits of $20K per person, $40K per accident remained relatively constant at around 10%. Post-reform, insurers must offer bodily injury coverage options with limits as high as $250K per person and $500K per accident. As the defaults or limits as low as 50/100 by completing a special form that acknowledges the understanding of their choice, the consumer's choice. Since the reform, now roughly 80% of insureds select limits at or above that $250,000, $500,000 limit. Because of the large shift towards higher amounts of coverage, the average earned BI premium increased significantly in 2021. The average premium then remained relatively constant through 2023 and then rose again in 2024. So overall, the report estimates that the reform increased this portion of the policy by $21 or 6.5%. Okay, so the study was required to consider the demographics of those impacted by the reform, and the report included data on geography, age, gender, and marital status. This slide here displays estimated change in average PIP premium per insured vehicle by county. The reform had the greatest impact on premium on both a dollar and percentage basis in Wayne County and the surrounding metro area. As policyholders there experienced the largest dollar increase in average PIP premium, decrease in average PIP premium per insured vehicle. For the BI portion of the policy, the impacts were reversed, where Wayne County experienced the larger premium increases than most of the other counties. There's a lot of additional details on this in the report, which can be found in Appendix B. All right, in addition to geography, the study reviewed the impact of the reform by age of the insured. Here is the estimated change in average premium per insured vehicle as a result of the reform by age. For liability BI, which is on the left part of the graph here, the report states that policies with named insured under 30 or over 64 experienced larger premium impacts from the reform than that of the statewide average. This suggests that policies may have carried lower BI limits on average compared to the statewide average prior to the reform. Those between 30 and 44 had impacts in line with the statewide average, and those between 45 and 64 had the smallest impact, which suggests those policies carried higher BI limits on average compared to the other policies pre-reform. For PIP, in the middle part of the graph, the report states that most policies experience similar premium impacts regardless of age of the named insured, with policies of those over 64 years old experiencing larger premium savings than all other groups. The report notes that this is likely driven by the opt-out of PIP coverage option, which insureds are eligible to choose if they have Medicare, which was a new option for consumers. The report also studied the impact of the reform by gender and marital status, which are combined here. This graph shows that estimated change in average auto insurance premium per insured vehicle on those specific factors. With all coverages combined, policies with a single male named insured were impacted approximately the same as policies with a single female named insured. This suggests the reform impacted them similarly by gender when looking at policies of those that are single. However, the report notes that auto insurance premiums are highly individualized and that gender and marital status can be correlated with other household and policy attributes used in the rating of auto insurance. A good example of that is policies where the named insured is married are more likely to have multiple drivers and multiple vehicles on the policy. Many auto insurers differentiate premium based on these characteristics, and the report notes that these policies are also more likely to have young drivers on them compared to policies where the named insured is just single. So while the use of gender and marital status in setting rates was prohibited by the reform, the report notes that the differences measured in impacts of the reform across these demographics likely represent differences driven by other correlated variables. So as mentioned, the reform created an amnesty period for consumers who did not maintain required auto insurance coverage in the past. During this period, if consumers purchased insurance before January 1st, 2022, they could do so without facing any penalties. The report shows how the estimated uninsured motorist rate in Michigan has varied over time since 2016, and how it compares to the U.S. uninsured motorist rate as measured by the Insurance Research Council. While the post-reform rate of uninsured motorists in Michigan is higher than pre-reform rates, the increase in Michigan has generally been smaller than the increase experienced across the U.S. So essentially the gap is closing here. The COVID pandemic had a noticeable impact on the rate of uninsured motorists nationally. This is largely due to consumers foregoing auto insurance due to a variety of reasons, such as economic pressure from a job loss, shifts to remote work, that relieved their need to drive. So the uptick in 2020 was observed across all methods and observed in nearly every single state. So this graph here shows the difference in the uninsured motorist rate between Michigan and the U.S. So Milliman's analysis suggests that the reform may have had an impact on suppressing the increase in uninsured motorist rate here in Michigan compared to those trends exhibited across the rest of the country. Pre-reform Michigan's uninsured motorist rate were roughly 5 to 5.8% higher than the U.S. rates. Post-reform, that difference is now down to around roughly 4%. So this suggests that the reform decreased the uninsured motorist population to a level roughly 1 to 2% lower than it otherwise would have had the changes not been implemented. All right, so the reform required auto insurers to document and file with DIFS the savings that they realized from the application of the medical fee schedule on claims. The report included these estimated savings due to the fee schedule by accident year. It estimates that the fee schedule reduced costs to auto insurers by 2.7% for accidents occurring in 2019, 6.6% in 2020, and 12.3% for 2021. The realized savings increased annually from 15.4% in accident year 22 to 19.7% in accident year 2024. In other words, the medical fee schedule eliminated roughly 1/5 of the overall PIP cost by accident year 2024. The Michigan Assigned Claims Plan is an entity that insures eligible individuals who did not have access to no-fault insurance by that they're provided PIP benefits as required under the law. So the reform shifted the coverage applied by the order of priority from auto insurers and the MCCA now onto the Michigan Assigned Claims Plan, and it limited the maximum amount of benefits payable under this to the MACP. In most situations, the maximum benefit for a claim here is now $250,000. Previously, the coverage there was unlimited. The report found that despite the increase in the number of claims reported to the assigned claims plan, the average cost per claim decreased. Because of this, the average post-reform cost of the MACP per insured vehicle has remained relatively similar to the average pre-reform cost. Additionally, the report says that since the reform shifted claims from auto insurers onto the assigned claims plan, and because the overall cost of the assigned claims plan has on average remained the same pre and post reform, so the overall cost of the auto insurance system decreased as a result of this reform. Okay, so the legislature required the study to review the reform's impact on access to care and healthcare providers. So the findings suggest that in some respects, injured auto accident victims may have initially experienced impacts on access to care that are difficult or even impossible to measure accurately. For instance, healthcare providers may identify alternative treatments, medications, or services compared to what otherwise may have been prescribed pre-reform due to changes in reimbursement rates. Additionally, auto accident victims who rely on their primary health insurer for coverage may face limitations on the services and care included in their health benefits. Milliman found that there is insufficient data to determine whether patients' access to healthcare services has improved or worsened as a result of substitutions in services and treatments. Still, we do know that some families may be disappointed in the changes to their care plan, and especially if it is different from their preference or their previous care plan. And the department continues to maintain its complaint process to support consumers experiencing any challenges with their access to care. To evaluate whether injured auto accident victims were unable to receive care due to the lack of coverage or gaps in coverage, the report reviewed complaints submitted to DIFS on auto insurance cases to care, or auto insurance access to care related cases. The graph here shows the number of newly reported consumers with access to care complaints received by DIFS based on the year that the complaint was first reported to the department. 93% of those initial consumer complaints were first reported in 21 or 22, and most were related to auto accidents that occurred pre-reform. So there was 136 complaints in 2021, for example. Of those complaints, 84% were related to issues with attendant care, with one case related to implementation of the medical fee schedule. In 2022, the Michigan Supreme Court ruled in the Andery case that the changes to the medical fee schedule do not apply to claims covered by policies issued prior to the reform's June 11, 2019 effective date. So post-Andery decision, 10 access to care related complaints were submitted, with the majority of those stemming from pre-reform accidents. Based on the number of newly reported consumers with complaints submitted pre-Andery versus post-Andery, as well as the number of newly reported consumers with complaints submitted by pre-reform auto accident victims, the analysis here suggests that the reform initially impacted auto accident victims' access to care, as I stated, particularly with their access to attendant care. The reform states that the sudden drop-off in complaints after 2022 could suggest that this decision played a key role in restoring access to care for pre-reform auto accident victims, or that the accident victims were able to find and are now receiving alternative care. So because of many of the complaints submitted to DIFS, detailed narratives of healthcare providers being unwilling to provide care due to reimbursement rate under the new fee schedule, this report evaluated how average payments made for services paid by auto insurance payer via data from the MCCA compared to other payers, including Medicaid, Medicare, and the commercial health insurers. This table here shows the average payment by payer for services most prevalent within the MCCA's data. It should be noted that the average amounts paid by other payers reflect the average payment made for all individuals seeking care, so not just those that were seeking care from an injury related to an auto accident. For many of the most prevalent services in the MCCA's data, the average payments made by the MCCA for post-reform accident victims were lower than those for pre-reform accident victims, suggesting the medical fee schedule reduced the required rates for healthcare providers caring for those individuals. However, even with the cost reductions across many services, on average, the report found that the MCCA has generally paid higher rates per unit for most services noted here, such as emergency room visits, office visits, CT scans, therapeutic exercises, community work/training, and home health or CNA services compared to rates paid by other health insurance payers. This pattern was seen for both pre-reform and post-reform MCCA accident victims. The report's review regarding access to care and healthcare providers also looked at whether access to care was impacted by the reliance on health coverage after the exhaustion of auto insurance coverage, including PIP medical or other available coverages. The slide here shows the resulting estimated number of auto accident victims per accident year who are now expected to exhaust available auto insurance coverage and may be reliant on health insurance coverage for care if that coverage exists at some point following that accident. So the report's analysis estimates that nearly 4,000 auto accident victims per accident year, 5.7% of all auto accident victims, will exhaust coverage by an auto insurance payer and may ultimately rely on health insurance payer for care at some point following that accident. However, the report notes that not all will have coverage disputes with their health insurer. Of those expected accident victims, Milliman estimates that approximately 2,800 per accident year, or 4% of all auto accident victims with auto insurance, will have verified that they have health insurance from Medicaid, Medicare, or some other form of qualifying health insurance based on the requirements to purchase certain PIP limits and per statute. So due to a verification process, the report states that Milliman does not expect there to be coverage disputes for these auto accident victims regarding whether the health insurance payer must pay for services related to an auto accident. These auto accident victims, however, may still have limitations on what services are covered compared to auto insurance payers. The report estimates that almost 1,100 auto accident victims, or roughly 1.7% of auto accident victims per accident year, will ultimately rely on commercial health insurance without being required under state law to verify their health insurance coverage injuries from these auto accidents. So what are the key takeaways? According to Milliman's report, the reform had many impacts. It reduced PIP premium while continuing to be the only state in the country to offer the option of unlimited lifetime medical benefits. BI limits were increased, which caused that portion of the policy to increase on average. People may be paying more overall, but the PIP reforms mitigated rising costs elsewhere. It decreased the MCCA assessment by $120 per insured vehicle since 2019. Overall, it reduced the uninsured driver's rate gap in comparison with that of the national average. There were increased consumer protections. It added an option for seniors to choose to rely on Medicare, which has been increasing in popularity each year. It introduced a medical fee schedule and lowered payment rates for attendant care services that may have initially contributed to reported difficulties in accessing those services, as well as changed some people's existing care arrangements. And the data suggests that access to care issues may have been alleviated due to a variety of factors, such as market adjustments, judicial decisions, and the DIFS complaint process. So why do some of you all still get calls from your constituents about rising auto insurance rates? So the reform was successful in reducing that PIP portion of the insurance policy, as well as providing the options to drivers. The same is the case for the MCCA fee, which has been significantly reduced. The BI portion increased due to the higher limits. The national trends have had a major impact on the insurance market. And Michigan is certainly not immune to any of those national factors impacting that. But the report analyzed if the reform made a difference on what consumers would be paying. The conclusion overall was yes, drivers would be paying hundreds of dollars more should these reforms have not gone into effect. So what can be done to further reduce costs? Addressing insurance fraud is a big one. Reducing fraud helps reduce insurance premiums by addressing waste in the system. Insurance fraud affects everyone and costs Americans billions of dollars each year. So the fraud investigation bill package that passed through this committee last year would further help uncover, enforce, and deter that insurance fraud. Increasing marketplace competition is a big way to drive down premium. So market competition is critical in fostering that economic growth and sustainability in the insurance industry, which would impact consumers. Improving the overall transportation infrastructure technology, so continuing to invest in the quality of Michigan's roads and bridges, intersection safety, collision deterrents, and real-time communication with drivers, and then, of course, continuing to work with you all to educate consumers about shopping around, especially letting consumers know what options are available to them. So that concludes my summary of the report. I will turn it back over to Jenny to conclude the presentation.
So as a reminder, DIFS has a dedicated webpage to inform consumers about Michigan's auto insurance law. And this site includes a lot of different things. So information on how auto insurance reform helps and impacts drivers, tips when shopping for auto insurance, how to file a complaint, what to do if you're having issues with your insurance company, agency, or agent, and a dedicated place to report insurance fraud. I'm sure a lot of you use these for your constituents and share them, and we highly recommend that you continue to do so. And we're just here to assist Michigan drivers with any insurance-related questions. Our contact information is there. And yep, this concludes our presentation, and happy to answer any questions.
Thank you. That was obviously a lot to digest. I hope the committee had time to actually look at the report prior to you coming in, but it is a lot for the average person that may be listening in to try and digest some of this. So I'm going to start or lead off. So pre-reform, I mean, Michigan was known for years to be like the #1 most expensive auto insurance in the nation. I think we held that title for quite a few years in a row, unfortunately. So if we were known to hold that #1 spot, and given all the factors that we discussed today and the reform that happened, where does Michigan currently rank?
Yeah, that's a good question, and that's why we provided as much context as we can about the national landscape in the report. So pre-reform, universally #1. Again, we're the only state that offers that unlimited lifetime medical benefits to accident victims. The department doesn't collect the data on other states. Milliman didn't really focus on Michigan through the context of the rest of the country. They focus more so on what the reforms actually did here. I've seen various reports suggesting we're generally still in the top 5, but again, it's the unlimited lifetime medical benefits that largely steer us being as expensive, and you get what you pay for in some respects.
Yeah, I think the last article I read put us at like #6.
Yeah.
Which to me is impressive if we're holding the top benefits for people. All right, with that, I believe Vice Chair Tisdall has a question.
Yes, thank you. Part of my question was just asked and answered. In the PIP clause, there's a pecking order of who's responsible to pay when. Is there any obligation for the primary insurer to put in their clause that they are in fact the primary insurer and are obligated to pay until applicable policy limits are exhausted?
Yeah, so it depends, of course, on the level of PIP that the consumer is selecting. So some of them coordinate with Medicare and Medicaid and qualified healthcare and other options. So a consumer is entitled to coordinate their benefits and essentially, in exchange for reducing their auto insurance premium, have the health insurer pay primary, and it's part of the renewal and signing up for insurance that the consumer can select. So yes, it is the short answer to your question.
So that is in the, can my office get
Sure. Yeah,
that
so
language, please? And then in
coordination
the,
of benefits, yeah.
and I don't know if it would be in the PIP legislation or otherwise, are Michigan no-fault insurers able to subrogate? Go after other available collectible insurance if they believe that some other party is responsible. Do they have those subrogation rights?
So the circumstances of every accident, every policy are different naturally, right? So it depends on what option that the consumer selects. First and foremost, it depends on the circumstances of the accident. But for PIP, we're a no-fault state, but there's other coverages naturally as part of the consumer's policy. So for collision, for example, there's more options there.
So subrogation isn't necessarily excluded.
Yes.
Okay. All right. Very good. Thank you.
Rep. Schutte.
Appreciate the presentation. So just wondering, you look across our 50 states, how many no-fault states do we have?
Ooh, that's a good question. I don't want to cite an inaccurate figure, but I think it's somewhere between a quarter and half of the states. Are
Okay.
no-fault states.
And those other no-fault states, what are our coverage limits compared to theirs?
It's significantly lower. I don't have a
Significant.
breakdown.
What is
but, like, I think some
significantly
states could
mean?
have like 10,000 is
10,000?
their
Okay.
PIP limit. Yeah.
Do you know what the next highest state is?
I think it might be New York, and
New
I
York.
can't remember if it's 10, 25, or 50, but I can certainly get you that information. But
Okay.
it's significantly lower than unlimited naturally, and then
Yeah.
even our other lower PIP levels.
Okay. So is either 10, 25, or 50, and that's still, significantly lower than what we have. Okay. And then so the reforms required that there were minimum PIP premium reductions by tier. So it was 10%, 28%, 35%, and then 45% as you move through the different tiers. Did we see those actual premium reductions?
We did, yeah, Jenny. I don't know if you want to go back to the slide. I believe it's. But yes, so all of that data has to be reported to the department by the insurers, and they've met and exceeded those mandatory PIP rate reductions.
So that's an important point. So the
Right here on the slide, yeah. So in green is what statute required. Blue is the reductions that were met by the insurer.
so that just to go over that blue gap between the blue and the green, that is the savings larger than what state law requires.
Absolutely.
Okay, that's important. Thank you.
Rep. Fitzgerald.
Thank you, Mr. Chair. Thank you very much for the presentation today. One question I do have regarding the access to care. On page 36 of the report, there is actually language by Milliman to basically say the reduction in reports or complaints to DIFS is not necessarily indicative of a lack or issue of accessing care. Does the department have a response to that, insight on that? It's middle of page 36 at the end of that initial section, but it does say it is not possible to conclude definitively that there are no or limited access to care impacts on post-reform auto accident victims from complaint data alone.
Yeah, that's a good point. I think they preface that with commentary generally about how hard it was to get verifiable data on access to care. And really, one of the best barometers for that was consumers that were reaching out and responding to the department. So there could be other variables as to why a consumer or provider would not reach out to the department. But that was the data that they had, and that was the data that they utilized for that section of the report. So I think both of those can be true.
It does also say that it sometimes takes years for these claims to evolve, and thus complaints may not be basically at their point of a complaint rising to the level of a DIFS investigation to that. And so I do think that sometimes, or in this case, time will have to, if you will, tell as to whether or not some of that access is still problematic. The other question I had was regarding the MCCA fee. You talked about that being reduced. And could that be actually related to the fact that there are fewer consumers accessing that? Or is it really due to pedestrians and uninsured persons not being able to access the MCCA?
It's due to a variety of factors. So they have an actuarial computation that they go through, and they determine basically what their predicted expenses are going to be, and then they adjust the MCCA assessment based on that. So a big portion of that is inevitably going to be the fee schedule, because they're paying less for the medical claims. But there's a variety of other factors, like, as you said, less people selecting the unlimited PIP option.
Rep. Aragona.
Thank you, Mr. Chair. Thank you guys for being here. I was wondering, I actually got a couple of questions, if that's okay, Mr. Chair, but Figure 11, it's a map of the counties here in Michigan. There seems to be kind of a bigger difference between, even some of the counties in the UP, and then obviously it looks like Wayne has the highest average savings. Which I'm in Macomb County. I'm just north of Wayne. We're have almost as much savings, so I'm okay with that. But I'm just wondering, what do you attribute that difference to? That drastic of a difference?
Appreciate the question. I think anything I would say to that would be purely speculation. It could be anything from claims data, anything that they're using to set their rates, and all of that goes into setting those rates based on the risk factors associated with setting rates there. It could be people selecting lower PIP limits, and that would reduce the overall cost of auto insurance there. It could be just less people. I don't know exactly. The report didn't note it either.
Okay. All right. Fair enough. Thank you. What do you and you guys had mentioned about a rise in costs across the board besides PIP nationwide. And I think you started to mention some of what that's attributed to, but I missed it. I'm sorry. Can you hit some of the highlights on where you see auto insurance rising? What are those cost drivers?
I wish I could attribute it to one thing. It's a variety of things. It's economic trends and pressure. So if you think about insurance, right, as I know you're familiar, all that goes into paying out in the back on factors that overall actuarial calculation for what the rate setting is going to be. So when a new vehicle costs significantly more, even a used vehicle costs significantly more than it did pre-reform or just the previous year nationally, that's going to impact insurance costs. I think a big one that we see is cars now have such an increase in technology in the vehicle, and it's so incredibly expensive to repair in the event of an accident. So that's driving some of those costs. Think about like the big screens that are in the vehicles, increased litigation. You've seen increases in fraud that we're trying to address. So there is no universal factor we could point to. It's a combination of all those factors, from the economy, increasing costs, and then just overall insurance trends. Unsafe driving, for example.
Okay. All right. And just I guess a tangential note away from the Milliman report. I had a friend who's in the military. He's at the Naval War College out on the East Coast. He was actually driving a Tesla. He had a small dent in the rear bumper. They ended up totaling the car. Have you guys heard of these types of issues where there's something very small, they end up totaling the car? I mean, he was telling me about this, and he ended up getting a new car. But that seems like that would be a pretty significant cost driver if there's issues there. Are we seeing those types of things in Michigan? And do you guys have any ideas around maybe buttoning some of that stuff up? Because that seems like it could really raise premiums for our residents.
I can take a look at what statute permits insurers to do. I can tell you anecdotally, I've had constituent complaints from legislative offices about that exact subject, and I think the insurer, at the end of the day, makes a calculation as to what's more cost-effective, repairing or replacing the vehicle. But yeah, it's something we could look into, and I can get you more information about what's permissible. And certainly if you have any constituents that have that issue and have complaints, I'm happy to assist with those as well.
Okay, thank you. And then I got two more, if that's okay.
My goodness. We like you, Rep. Aragona. But go ahead.
Thank you, Mr. Chair. I was noticing as I was going through the report, you had some of the figures, or the Milliman company had some of these figures referencing COVID. Now, I know that when COVID happened, a lot less people drove, therefore less accidents. That was going to attribute to a decrease in premiums. Was there an adjustment made for some of these numbers that we're looking at that there's a lower amount, or can you speak to that a little bit, just to so we're referencing the right numbers here?
Yeah, there's an entire section in the report that details the adjustments they had to make. So I think that
Okay.
was a challenge on the front end. Is COVID happened essentially right after the reform, right? And it's a major just shift in a lot of different things that they saw from driving habits or whatnot. So they had to control for a lot of that to get an accurate assessment of what the numbers actually were. So a lot of that's detailed in the report. I didn't do the controlling. It was done by Milliman, who conducted the report. But yes, my understanding is that they controlled for that variable. And at that time period, as I think Jenny or I noted in the presentation, the department actually required insurers to give a rebate to consumers because so few were driving during the pandemic, and they were paying a rate that was that reflected more than what the actual risks were associated for that particular consumer. So happy to get you more information on that if you have it, but the report does detail that in a whole section.
Okay, thank you. Last one. I noticed, I forgot which figure it was, but it looked like after the reforms there was a rise in the 500 liability coverage, a significant rise. Can you tell me kind of what you might attribute that to? 'Cause it looks like we have better liability coverage now after that, and that wasn't exactly what I wasn't in the legislature at the time, but they were going after more PIP side, but clearly people are better covered through liability.
Yeah, that's a simple one. Statute changed the threshold, and the consumer can opt into a lower threshold, but they have to sign a special form indicating that they understand the risks of additional liability exposure to themselves if they opt into that option. So the reform increased those thresholds in tandem with all of the other changes that were made. So I attribute that to statute primarily.
Okay, just that we have to opt in, and if you want, you got to sign a
Yep.
form.
And just
come
not
opt
as many consumers are doing that, opting into the lower levels. They're continuing to select the kind of the default option, the default minimum option.
in. Gotcha. Okay, thank you.
You sure you don't have one more?
I actually do, if you want.
Rep Fitzgerald, we're going to give you a turn, and I hope you're going to talk about your side mirror.
No, but I am going to talk. I am going to respond to Rep. Aragona's point about Tesla, dent, total loss, and I do think that is something that I don't want to draw away from the report and before us today. However, I do think it is related to this. In some cases, insurers will deem something to be a financial total loss, understanding that the delay for part, the necessity for storage of the vehicle, which we have other issues here in the state, but also nationally about storage fees, transportation fees from an accident site, and others, that there can be a need for the insurance company to deem that a total loss and thus pay out a $70,000 Tesla for what may be a $9,000 repair, but because of the ancillary costs associated with that, it's problematic. And I say all this to lean into the fact that we do have in the report that Wayne County drivers have seen a reduction because of this reform. However, much of those costs have been offset due to the liability increases that have been higher than average across the state and the country. And so we still see that Southeast Michigan drivers are bearing the cost of this rating discrepancy, not based on zip code, but region. And so I think that is something that we should continue to explore. I'd be happy to discuss with Rep. Aragona about additional safeguards for consumers when it comes to financial total losses. But I do think that overall the report is demonstrating that while one part of the policy may be decreasing, the overall cost, and why drivers still continue to call our offices, is that the total cost is not impacting their bank account to this degree. Again, it rated or adjusted for pre-COVID impacts to post-COVID impacts.
Very well put. So we've talked with your office quite a bit about what are some things that we can do to help address costs here in Michigan, because again, I think everyone on this committee probably gets those phone calls, right? We've talked about insurance fraud. We've talked about, I think I've talked with you guys about like third-party litigation or maybe some legal impacts to costs for insurers, right? And how that impacts premiums. What are some other things that you see that we can do? Would it be lowering BI limits? What are some other things that you think would impact cost?
A major road funding proposal. No, I'm just kidding. It's you know, the potholes and things like that certainly to impact drivers. The competition, so creating a marketplace where more insurers come in so they can compete with each other to reduce rates is a big one. But I think you hit the nail on the head with some of those other factors, with the litigation, with the fraud. You know, I wish there was like a super easy response. A lot of your insurance costs that are borne are largely tied to and connected to larger economic factors. So if the cost to repair a car keeps going up, it's going to impact insurance costs.
Do you, looking at pre-reform to now, has the marketplace changed? Has this done anything to impact competition, good or bad? And then, what are some things maybe we can do from there?
I know a year or two after the reform, we were tracking new entries in the market. Some of those were brand new companies. Some of those were affiliates of companies that were already here. And I think at one point we were at, I forget the exact number, but several dozen of new entries in the market that saw us as a better environment to operate. And they had baseline authorization to enter the market. They were going through the process. I don't have a count on exactly what those are, but yes, in general, we did see increase access to the market from companies coming in, and of course the hope is that drives down costs by creating more competition.
All right, thank you. Any other questions from the committee? No? All right, thank you both for being here. Appreciate it.
Thank you.
All right, with that, can I have a motion to excuse absent members? Rep. Fitzgerald makes that motion. Without objection, absent members are excused. And with no further business before the committee, we are adjourned.